Acquiring a business? BizNexus simplifies it. Access thousands of updated opportunities in our DIY marketplace or supercharge team sourcing with OmniSource, your all-in-one platform for on-market, off-market, and coming-soon deals. Scale smarter today. Learn more or book a demo at www.biznexus.com.
Disclaimer from the always present legal team. Podcast conversations don't necessarily reflect the views of BizNexus Incorporated. Everything you hear is informational news and updates from around the industry. We're not recommending any investments. We're not offering any investment advice. Be sure to do your own homework.
All right, so today we're going to deep dive into funding in the lower middle market. You know, if you're in this space, like we all are,
right,
you know how crucial it is to get where the money's coming from, right?
Oh, absolutely.
And we've seen this trend, you know, more retail investors getting involved in mid and upper middle market funds.
Yeah, definitely.
But it makes us think, is that same appetite trickling down to those high net worth individuals?
Yeah.
Could they be the next big funding source for emerging managers, specifically in that lower middle market?
That's the million-dollar question, right?
Yeah.
What's really interesting is when we look at the lower middle market right now,
Yeah.
Proskauer's research points out that they really rely on those long-term relationships.
Mm-hmm.
You know, placement agents connecting fund managers with institutional investors.
Right, the traditional...
Yeah, exactly. Pensions, sovereign wealth funds, family offices.
Still the bread and butter.
Yeah, they're still the dominant force for sure.
So it seems like those tried and true methods are still key. But is there like a shift happening that could impact that lower middle market?
Oh, I think there definitely is.
Okay.
You know, Ropes and Gray's report points out that high net worth individuals are becoming a bigger and bigger source of what they call non-traditional capital and private equity as a whole.
Interesting.
And this isn't totally brand new.
Right.
The industry's been trying to come up with products that fit these investors for a while now.
Yeah, makes sense.
But the thing is, more sponsors are starting to have real success.
Okay.
And that includes potentially the lower middle market, too.
Yeah.
I mean, think about it.
Yeah.
These high net worth individuals, they're looking to diversify.
Right.
They want something beyond the usual stocks and bonds.
Of course.
And the lower middle market, it's less efficient.
Right.
So there's potential for some really nice returns.
I gotcha.
So it's a win-win.
Yeah.
It makes a lot of sense why there's so much interest.
Okay, so Proskauer mentions this as one of the fastest growing areas. Can we unpack that a bit? Why is access to this H&W capital so important for the lower middle market's future?
Well, the co-head of private funds at Proskauer, they really emphasize how much access to high net worth individuals has expanded within private funds. You know?
Yeah.
And it's interesting because big sponsors, they've been working with super high net worth individuals for a long time.
Right.
But what's changing is this access is trickling down to the firms in the lower middle market.
Okay.
Which could be a game changer for fundraising.
It sounds like the whole landscape for lower middle market fundraising could be about to change pretty dramatically.
It really does.
Campbell Lutyens seems to agree with that, right?
They do. They anticipate that as these retail and wealth channels keep evolving, there's going to be way more access for mid-market fundraisers overall.
Okay.
And that's definitely going to impact the lower middle market too.
So, you know, thinking about our listeners in the lower middle market specifically, what are some of the hurdles in attracting that H&W capital, especially with those less liquid investments?
That's a really good point because liquidity is a huge concern for individual investors.
For sure.
And Campbell Lutyens actually talks about this directly.
Yep.
They suggest offering more flexible fund structures. Think like semi-liquid funds that give you the chance to cash out sometimes.
Okay.
Or evergreen and open-ended funds that don't have like a set end date.
Right.
They think that could be crucial to get that H&W capital into lower middle market opportunities.
So it sounds like maybe that's the key.
Yeah, it really could be.
Make it easier for them to access their money, and suddenly it's a much more appealing prospect.
Exactly. And it makes you wonder, how can fund managers change their structures to keep up with what investors want?
Right. It's all about adapting.
Exactly.
So it seems like the big takeaway here is that while the lower middle market is still pretty dependent on traditional funding, all this activity we're seeing from retail investors and private equity overall, It's creating a real opportunity.
For sure.
High net worth individuals could be a big source of capital, and that's only going to grow as new fund structures come along that address those liquidity concerns.
Yeah, I think that's spot on. It's pointing to a pretty big shift in how lower mid-market firms get their funding.
So for those of you navigating the lower middle market, think about this.
Yeah.
How could understanding these changing capital flows and this growing interest from high net worth individuals impact your strategy?
It's definitely something to pay attention to.
How could it change how you build relationships? This is a development with some pretty major implications.
Absolutely.
Thanks for taking this deep dive with us.
Thanks for having me.
It's been a pleasure.
Yeah, it's been great.
Take care.
You too.
Bye.
Thinking of exiting your business or taking on a private equity partner to help you grow faster? BizNexus has you covered. Tap into our network of thousands of best-fit investors, acquirers, and proven M&A advisors, and we'll help you begin the relationship confidentially on your terms, your timeline. Learn more at biznexus.com.